Quasar Marcus Live. Good afternoon. You got him, Jim Iorio. Listen, Jim, I have been in this game just like you for over 3 decades. I think for you almost 4. Jim, I watched that Federal Reserve meeting with him coming out. I don't think a man sweat ever that much in his entire life watching that. He said something very interesting in there. He called this cut a what? A risk management cut. What does that mean to you? I've asked several people.
Okay, he fundamentally believes in the concept of the neutral rate, which is that the rate at which it's neither stimulative nor what's the opposite word of stimulative to the economy. And he believes that we are above that. And he wants to gradually get to that. Now, by the way, there's a lot of data that suggests he may be wrong. Yes, the labor data is weak, and that's what it seems to have shifted his focus to. But the retail sales numbers are strong. And by the way, inflation is still running about 2.7%, which guess what? I think this is a big secret, but I don't think he minds that too much. I think he wants to run inflation hot for a couple of years to bail out some of the most indebted government entities. So I think this is an odd cut, but what he means by risk management, he wants to get a little incrementally closer to what he considers the neutral rate. Do you think that's what he meant too?
What I said was that I felt that he was trying to bend the knee a little bit to the White House and saying, okay, I'm giving you your cut. I don't know about the next one. Here we are. The administration wants me really cut, but my team here says only half says okay. One guy says, yeah, big time cuts, 50 basis points. The guy that still works in the White House, don't get me
exactly. He's a lapdog. I'm sorry. Yes, yeah.
Okay, but here's my problem with this. This is exactly the worst type of economy in the world, right? Stagflation. In my case, inflation's up, job losses are coming in, markets are high. It seems to be a big bubble. I was on Wolf Financial yesterday on Stocks on Spaces, and I got absolutely reamed about how I think the market might be too toppy here. What's your thoughts here, Jim, with all that?
So I think that if he doesn't care about inflation and plans on lowering rate into inflation, because I do think, by the way, that things like AI, productivity increases and supply side solutions into 2026 will kind of make the upside path of inflation less easy. So I think those things will counterbalance it. So I'm hoping to God they are too, because otherwise, if they do not, just throwing gasoline into what is already a smoldering fire in inflation, we've seen what that can do. And stagflation is absolutely the worst thing because the Fed can do nothing. Fed can't lower rates because they risk spurring inflation. Unless he doesn't seem to care and he believes what I do. So that's what I'm holding out hope for. So I think the stock market rolls for the time being. But I think if that doesn't come to fruition, that those things I mentioned don't start to stifle inflation, then all of a sudden we could be in for a serious rough patch.
This afternoon, I was on thestreet.com with Carolyn Woods, you know her personally, and she asked me a very question that, I answered it in a specific way. Recession is the big bad R word on the future.
I think when you think about the jobs picture and the fact that it was overstated by 900,000 jobs in a yearly period, not to mention that's on top of the other revisions we saw, which were always down. There's an easy argument to make that we were in a recession before and just the data didn't show it because the data was crap. But now what I will add is that I've believed that 60% of the population, the lower 2/3, have been in a recession just because of the inflation and because they can't make their bills. The asset holders, the you and I's of the world, we're doing great. All the money that was thrown in during COVID, which was an extra $9 trillion by my estimation, showed up in assets that we hold, real estate, stocks, bonds. So thanks for making me rich. I wish you wouldn't have done it by making the rest of the world poor, by the way. Right. And I'm against it. Yeah.
Right. I agree with that. So I answered her in the way that I think that we were in a recession. I also think we're going to go back to the recession, but not until end of next year, though.
That sounds good. That sounds reasonable to me. Not good. It sounds reasonable. I think we do need to pay the piper a little bit for years of growth. But I'm not this big MAGA Donald Trump guy. I
Right.
do, however, believe in supply side solutions. I believe in unshackling the corporate sector from regulation and from onerous taxes. I believe in lowering the capital gains tax, which, by the way, they just started mentioning in the last 2 days. A capital gains tax for the wealthiest is 2.38%, not to mention that some states like Illinois tack on another 5%. That is a punitive capital gains tax, and it tends to limit the free flow of money into the proper investments. It creates bubbles. It could be easily fixed by lowering that. But anyway, if those three things happen, and the economy starts to chug along better, I think the recession can be relatively mild. Remember the last two big recessions we saw? I'm discounting COVID, but in 2008 and 2001, these came from massive buildup of leverage in certain assets that needed to be unwound. That's why 2008 was probably the worst.
Are we seeing that emerging right now? The banks for kids getting credit to go play option markets and Robinhood.
Yeah, we are definitely seeing that, but I don't think it's the same. I think that's the kind of thing that writes itself in a matter of a week. That's why I think always the 0 days to expiration, to me, it sounds like gambling. It sounds like a lot of coin flipping, but does it pose a systemic risk? I've always believed that it doesn't because it's a daily thing. And as a matter of fact, it could create daily volatility that may limit longer term volatility by not building up these ridiculous positions.
So you're saying that it's helping to take off some of that steam that would normally happen building up like tomorrow with quad witching, right?
Bingo. It's like a release valve. We've long contended that deep corrections in bear markets and real market dislocations come from these build-up, the lack of respect for volatility, particularly in equity markets. Volatility VIX stays at 13 for 2 years, and then nobody believes it can ever shoot higher again. That's when the real dangers happen. But a guy like Donald Trump, the president, who's a walking headline bomb, 0 days to expiration, which could cause daily volatility, I'm not even 100% sure of this thesis myself. This is just something that's in beta. Could be proving to be a release valve that solves the longer term volatility issue.
But I like that. I mean, I never really thought of it that way, and I might change my tune a little bit too because I'm not I love options a bit. I grew up on them, was raised on like yourself. My problem has always been the same. These weren't what the options were built for, but now we've changed that philosophy. Yeah. And I kind of like this answer better than it's just gambling, right? And I
appreciate that. But by the way, it can be both. I don't love the fact that people are charging headlong into I can make money on a daily basis day trading game. I think so. That's why whenever I go and do stuff for CME or the different brokerage houses, I do it. Right. See, I have no problem with people trying to take control of, learn how to trade, how to take control of their finances, but you must do it and mitigate risk. We know old traders and we know really, really bold traders, but we don't know old, bold traders.
That's it. I love that. I almost forgot about that old adage. Yeah. All right, I'm going to ask one more question. I'll let you go. I know you got to go get out of here. Cubs going to win the World Series?
The Cubs are peaking at a really nice time. This is such a fun team. In the era of when there's a new team every year, it's hard to really fall for a team because you don't know the players as well. But this team, we have fallen in love with. My daughter's a season ticket holder, so I go to the games with her. But PCA, the center fielder, that's where doubles go to die into his glove. He can't hit right now, but they're peaking at the right time. They're one of the best teams in baseball. They just happen to be in the same division with the best team in baseball. They were second in their division by a half game with the second best record in baseball a couple months ago. I think the Cubs, of course, are going to win the World Series.
There it is, Jim Iorio. We'll see you right back here next week, man.
See you, brother.
Thanks.